Okay. Okay, sounds okay. Thank you, Raphael. Appreciate it. I'm not sure what happened there because the mic was connected, but it just wasn't working. But it's working now, so I appreciate it. Anyway, we'll get back to some analysis. I believe you did mention which pair was it again? Pound USD. It's on the screen as well. And I think someone else also mentioned Aussie CHF. What's up, LFTJ? Welcome to the stream. Hope you're doing good. Apologies about the mic, guys. I'm not sure what happened there. Okay, so yeah, we'll go through pound. We'll discuss the intraday because we just went through the higher time frames. Pound USD in a range, not the biggest fan of the price action, but intraday again, some short-term opportunities could be present. Then we'll take a look at Aussie CHF as well. According to pound USD, weak data, should I short pound USD at current price? Again, weak data, strong data, it just comes back down to what supports a valid trade based on your plan. If you're looking at data and fundamentals and the perceived value of pound at the moment, then of course that could be a legit reason to short pound USD. If you're looking at technicals or a mixture, then of course you can have a plan or a set of rules that allows you to take a trade or not. So it's not, the question is not, okay, weak data, let's short pound. Is the question is your plan built around the data that comes out for particular currencies? If that's the case, then of course you've got the green light. If that's not the case, or you don't have a plan to say yes or no to a trade, then that's really the fundamental question you need to be answering. To build those rules doesn't have to be perfect, but just a set of rules to say yes or no. And that's really the important underlying question, because weak data price can still push up and then eventually fall maybe 2 days later. You could still be early to the party, and that's enough to hit your stop loss. So it's not necessarily about a fundamental view unless you know how to use that. But from a technical perspective, which we'll take a look at, what I can say is that based on the bearish move we had yesterday, we do have some value above us, which we could see a bearish rejection. So from a technical standpoint, I wouldn't be looking to sell yet, but I would say if we do see rejection here, that could be a smart play for a sell. Reason being, we rejected the high, we're starting to form some lower highs. But again, based on where we're trading, I would only be looking for a short-term move. And again, I'll show you a higher time frames. Would I be looking for a longer term swing trade from here to short? Absolutely not. We're not really trading it to a significant area. This is our significant area. This is our significant area. Anything in between is always going to be subpar. So it's always going to be a lower value area to trade from. Not necessarily meaning that you shouldn't trade, but it means you probably shouldn't be looking for any meaningful swing. Keep it short and sweet. Of course, price could dump from here and sell off, but that's not necessarily something you want to predict. That's something where if it does happen, I'll just trail my stops and see how far I can take the trade. But yeah, to answer your question for shorts, I do like shorts intraday from this area, provided we see some healthy rejection. So 1.36 roughly, between 1.36 and 1.365. This could be an interesting place for a short. And again, my target would probably use back to support, not even further than that. We could go further, but I would take the bulk of my profits here. It's not a condition where I'll try to push a trade. So yeah, answer your question. Make sure you have a plan in place that says yes or no for a trade, so you're not kind of just reacting to everything that goes on, because trading is going to be very stressful. Trading is stressful enough, but you're going to make it even 10 times more stressful by doing that. So have a plan to say, okay, what is my requirement to take a trade or not? But based on my own analysis, opinion on pound, I'm personally not interested in it. But if I was looking for short-term plays, that will be a zone I'll keep an eye on. We can take a look at Aussie CHF next. What's up, Yoshi? Welcome to the stream, man. I hope you're well. There should be a stop loss so that I don't get liquidity. Again, that question doesn't have a definitive answer, because you could put your stop loss a healthy amount above a level. What that does mean is that means the margin for error is now a lot bigger. So the odds of you getting stopped by a hunt or whatever, just natural fluctuation in the market is of course going to reduce because your stop loss is a greater distance. But of course, the disadvantage of that is that your risk to reward is going to diminish. The bigger your stop loss, the less profits you make, per unit of risk. So there is not necessarily that you want to have your stop loss so far away that you're not going to get stopped out, because you generally could be wrong on the idea. You want to be out at a reasonable price where you're wrong. The question you should be asking is the current conditions for pound USD, or wherever you want to trade. Is it volatile? Are we seeing dramatic price action? Is the market very volatile right now? That's really the question you want to answer, because you could have your stop loss. Let's say you're buying from support here. You could have your stop loss here. That's a reasonable amount, enough distance to give yourself some room, not too far away where you're saying, okay, I don't want to get stop hunted, so I'm going to have a ginormous stop loss. That's a reasonable distance. But this is only reasonable if the market is not very volatile. If we're seeing very aggressive price action, then naturally you want to give yourself more room. So the question is, you want to understand how volatile the market is. And right now, pound USD is not very volatile. Of course, that could change, but we're not very volatile. So if I was going to short in and around here, the safe place for a stop loss would be above the highs here somewhere. It depends on the entry, but I would say a stop loss above there is safe. Could you get stop hunted there? Absolutely. But again, you're trading not necessarily to maximize every trade. You're trading to put your stop loss in the correct place based on the conditions over 20, 50, 100 trades. That's really what you're aiming for. Some trades you'll get stopped out. Some trades price will come within 3-4 pips within your stop loss and turn around. And some trades you won't even have any drawdown. It will just flow in your direction very smoothly. So I would say above this high is where you'd be safer, but I can't guarantee that you won't get stopped out. And again, if that does happen, if the trade is still valid, you can always get back in. We're seeing the current price action, Euro USD versus pound USD. Which one would be better to be shorted eventually? Okay, we could take a look at both of them. I'm assuming you're talking about intraday as well, because I wouldn't be shorting them from a swing perspective. And when I mean intraday, I mean in and out within the same day. Swing, I mean holding potential for the rest of the week, sort of time frame. Yoshi took profits at the daily low yesterday after the week UK data, where you drew a line. Nice, very nice. Looks like the market reacted beautifully to that low. So yeah, again, when you're looking at opportunities like this and pound, because you have to understand the nature of FX markets. Do they trend? Are we trending right now? Is it a type of trade where I want to push, or is it a type of trade where I want to be ready to exit? And if you're shorting in and around these areas, you want to be ready to exit pretty quickly. So look at the nature of the market. We're not trending. There's no momentum. That means everything is just kind of bouncing back from level to level. So if you do hit a significant level like we did yesterday, of course, we could have broken through it. But naturally, that's an area where you want to lock in some gains, or just keep an eye out to see if we do react at that level. Because if that's the case, that would be a smart place to exit. So congratulations to you, Yoshi. I think that's a well-managed trade given the conditions. If, of course, we're in like a climate like we were earlier in 2025 with gold, taking profits at the high would be a bad decision, because the market's very, very volatile. When an exponential bullish trend. Taking profits at the high wouldn't make sense, but it would make sense in this condition. So it's all about knowing what type of situation you're in and reacting to that. But in terms of Euro USD versus pound USD, if I had to sell one intraday, which one would I look to rather sell? I'd probably rather sell pound USD, just because Euro, we have a slight kind of up drift. So there's a natural drift to the upside. And at the moment, we are coming back into some value here. We're reacting to that. Pound USD in terms of price, we are flat. So that means I've got an equal chance of price going up and down. And also, we've just tested support here. So if I can see evidence that price is not breaking through this zone, well, naturally, the next area prices like to come back and test would be here. So I've got a clear scope for pound USD. Short from here, back to support, provided we see some rejection. If, of course, price does break through this, then I wouldn't want to be shorting anyway. So I would say pound USD is the much clearer one in terms of price action. You got a clear scope. Euro's got a slight drift. Again, this is all intraday, not saying holding positions here. But yeah, I would rather short pound. I will keep the trades till Friday. That's fine. Just keep an eye on the trade. Management is just as important. It's just as important as the entry as the exit as well. So you don't want to be in a situation where it's okay. I'm shorting till Friday, but there's clear signs that price is struggling to move in my favor. Yeah, at that point, you probably just want to start to take some positions off. Reduce your exposure. You can exit the trade. Again, this is all kind of rule based, but if the market is not immediately rewarding your direction, your thesis, then it's probably a sign that there's not enough energy to make that push. Of course, news can happen, and maybe something happens on Thursday that rockets price in your direction. But you don't want to be so much hoping that price is just going to fall in your favor. You want to come into the trade with the intention that price is no longer pushing higher and now we're likely to push lower. So if you can see that fairly early on after entering, good, stay in that trade. If Thursday rolls on, Friday rolls on, we haven't really seen much movement in your direction or price is just sideways, it's probably best just to be a bit proactive and maybe reduce the size of that trade or maybe just exit, because there's no momentum here. So if you're shorting, you're basically saying that price is rejecting this level and it's going to move down. If that's not true after a day, then I would be careful. And that's just purely based on how pound USD is moving. No problem, Yoshi. No problem at all. I think that, again, that's very important though, because everyone, especially on social media, always talking about entries, getting the best entries possible. But entry is important, yes, but your exit arguably is even more important, because your exit defines your profit. Because you could have a really nice entry in a really nice position, really nice location, really nice stop loss. Your price pushes in your favor, but because you were stubborn with your exit, your price potentially comes back towards your entry, and maybe even worse, it's your stop loss. So if you timed your exit well, that good entry would have been a profitable trade. But because of your exit, it might be a break even, it might be a loss, or it might be a very small win. So your exit's actually going to determine what you take from that trade. And of course, same thing with a stop loss. If you stop loss in healthy place, you take a reasonable loss, etc. So yes, entry is important, but arguably exit is even more important. And everyone's so fascinated with entries that everyone forgets about the exit, which is at the end of the day what's going to define your profit or your loss, which is the most important thing, really. So again, that's where a lot of focus should be. And exits, you don't need to be a fortune teller. You just need to understand what the conditions are and what the market is currently rewarding. If the market is in a very strong bull cycle, breaking through highs, really showing aggressive momentum, then you want to be a little bit less conservative and let that bull cycle run its course. If the market is very choppy, very range bound, not breaking support, not breaking resistance, but don't have you take profit above highs or below lows, because there's a good chance price is going to react at those areas, and you don't want to be too greedy as well. So just being aware of the conditions will just dramatically help your exits. Hey, what's up, Replay? Welcome to the stream. Hope you're doing good, my man. Yes, we can take a look at gold shorts on the weekly. Yeah, we take a look at gold. I'm not so yeah, I'm kind of neutral on gold at the moment, but we can go through gold, of course. Replay, also looking for buying dollar yen. Okay, we can take a look at dollar yen as well. Okay, break of support. Yeah, we can take a look. Bernard, what's up? Yes, we can take a look at pound yen 15-minute chart. and the hour, no problem. Of course, if there's particular time frames you want me to take a look at, just drop in the chat. I'm more than happy to take a look. We'll start with gold, and then we'll take a look at dollar yen and pound yen. And of course, if there's any other requests, drop it in the chat. Happy to take a look. So yeah, gold, I did say I'm a bit more neutral now. So it's quite clear that we are in a different phase. You know, we were in an exponential, very bullish, bull cycle. Then of course we had this kind of mini crash here. I say mini, but it's quite large. And now things have changed. Reason being, we're no longer breaking highs. We're not necessarily breaking lows, but we're no longer breaking highs. So I can't treat price action here the same way I'll treat price action here. We're in a different climate. So because of that, we don't really have that natural drift anymore that we can take advantage of. Because in this area, in this cycle, price was just breaking highs, retesting, continuing. All you're looking for is breakouts or break and retest. That's what would be very profitable in this scenario. The biggest mistake would be treating this the same as this and looking for quick break and retest, quick buys at lows. It's not the same situation. So what would my bias be? Well, my bias is not really clear because we're not really seeing clear direction. Like I said, we've been in the same place for the past couple of weeks now, not really seeing overwhelming buyers or overwhelming sellers take control of the market. So the bias would be very flat. So if I had to trade this, I'll be looking at very short-term sells or very short-term buys of key areas. Now, there is a pretty clear area here from a seller's perspective, rejected once, rejected twice, around 50.83. Naturally, that would be a smart place for a short if we can show some healthy rejection there again. So for gold, if you're looking for a sell, if you're looking for a short-term move, I can agree with that, especially if you drift back to highs. I wouldn't be looking to sell here right now. We're in the middle of nowhere. I would be looking to buy there either. I mean, it might be a short-term bullish move off the back of that low, but again, I'll be reaching at that point. So yeah, gold, I do like shorts, but from 50.83, I wouldn't be shorting here. So yeah, if you're talking about the weekly time frame is still very, very bullish. So I would not be looking to short from a weekly perspective. This is still a very strong bull cycle. Yes, we've got that massive wick and things are shifting, but this is still a very bullish market. So weekly, I wouldn't be shorting. The beauty of the low time frames is you can take advantage of some short-term moves, which is what I would call this. So yeah, short-term sells I can agree with, but we need to be back at some significant areas first. Okay, so we'll go through dollar yen next, then take a look at pound yen afterwards. Okay, break of resistance. Okay, yeah, we can take a look at that. What's up, Natty? Welcome to the stream. Hope you're doing good. Yes, we can take a look at Euro USD, no problem. Yoshi, dollar US 30 is moving up. Yeah, I've been keeping an eye on US 30. Excuse me. I've been very resilient. USD is a big reason for upticks. Technicals are also looking good for the upside. Yeah, I agree. Yeah, I've been keeping an eye on US 30. It's at an awkward area. I was looking to buy from that level last week. Looks to be breaking back above. It's still on my watch list, so we'll go through that shortly. Okay, let's take a look at dollar yen. So not my favorite yen pair, I must admit. It's just been a bit awkward recently. I say that because we've had a very aggressive bearish move, followed by a pretty aggressive bullish move, followed by another aggressive bearish move. So the market has just been yo-yoing. And the only way you're kind of really profiting from this is if you're successfully calling these bottoms and tops, which quite difficult to do, especially with the manner and the way we're moving. In terms of bias, I don't really have one for dollar yen. Yes, we're in a slight uptrend, but it's just awkward because we are rejecting some significant resistance. And we're in a situation where you could pretty much classify this as a range to a degree, equal lows there, equal highs. You could make just as much of a case why price could sell off as why price could continue. So if I don't have a clear bias or clear direction, especially on an FX pair, my stance is always going to be neutral. If I am going to trade it, it's always going to be a short-term move. That's my policy. If I can understand direction clearly and things still look healthy for that direction, then I'm happy to look for swing trades and continuations. If the direction is not quite clear, things are a bit more range bound, then my policy is I have to be only focused on short term. I can't be looking at anything more than a day, and that's kind of the situation I'm here for dollar yen. So replay, you mentioned looking for a buy on dollar yen. I'm waiting for a break of the resistance 153.871. Okay, so I assume you're looking for a break of this consolidation here. If price can successfully break out of that, I would agree. And again, I will be keeping it short term as well. I wouldn't be so optimistic that we can do this. Of course, that is a move we could do. But again, trading is not necessarily about guessing what price can do. It's more so taking advantage of what the highest probability move is. And if you want to trail stops or leave positions to run, just in case we have a big move, yeah, that makes sense as well. What I would say is, though, we've had this bearish move, really fast, really rapid, and now price is finding equilibrium. Buyers and sellers are happy with price here. So if we could see some significant break of resistance here to show that, okay, buyers are stepping back in, I do like this for a move. Targets, a little bit difficult, though, because if you're keeping things black and white, you would say that and actually would be a target, but that's too far for me. Especially when direction's not quite clear on the higher time frames. Like I said, 50-50, I can see price pushing up, I can see price breaking lower. So if I don't have a clear evidence to support why I expect price to get here, then I can't be so aggressive to have that as a target. So I would say be careful with targets, but yes, if we can see a clear break of that momentum shifting back to the buyers, I would expect some follow through, of course, provided we stay above that area. If we show some follow through, but we come straight back down, of course, I wouldn't be looking to buy at that point. But yeah, I think that's a smart play, because if we are going to continue this range, naturally there is room to the upside, and naturally we could get there too. It's just I would be careful with the targets. That would be my advice. But I agree with the setup. And in terms of pound yen's been interesting. I've been keeping an eye on pound yen. We broke through some key support the past couple of weeks. Not quite back at this low here at 206. I want to see how we react with that area. Do we bounce? Do we break through? I want to see what we can see at that level. But essentially, if I'm looking at the higher time frames, we are still bullish. It's just a situation where, okay, we've broken through some support. We failed at highs. It's a market that looks like it's retracing. I wouldn't say we're reversing. I wouldn't say this is a reversal. It's way too early to say that. So I'm still treating this as a bull market, just having a deeper correction, finding some more buys before continuing. So what would make me bullish again for pound yen would be a comfortable break back above 210 roughly. If we can clear back above that, then I'll say, okay, this is looking like it's going to be a higher low. From then onwards, I expect us to drift back to highs. And then the opportunity would be the pullbacks on these areas. So that's really what I'm looking for pound. Potentially, we might drift back here and see a reaction. There could be some buys there, but I'll be careful. And from a seller's perspective, there could be some shorts off here as well. Let's say if we don't manage to break back above, and maybe this is the start of a bigger counter trend move or a reversal. Perhaps we could react here and perhaps we could sell off as well. So this becomes a really interesting area to focus on. I wouldn't categorically say, I would still say I'm bullish, but if we do fail to break above that and see some healthy rejection, I would look for some short-term sells. Again, rejecting this, I wouldn't suggest reversal either. I would just say, okay, we could probably see some downsides here, but I wouldn't be surprised if later we turn bullish. So you don't want to get too overconfident with it. But yeah, pound yen, that's really my area of interest. 210.5. I'll see what happens around 207 as well. Not really trading at much significance here. We are naturally coming back into a bullish territory, back into demand. So naturally, I don't want to be looking to sell here. If anything, this is the only area which I think sells make sense. So yeah, that's kind of my take on pound yen, but I'll drop to the 15 for you. So 15 15, I would look to see what we can do around here. The way I see it on the 15, we're very flat. We've been selling for the past couple of weeks. Momentum's, of course, dying. Why? Well, every time we do make a new low, it seems to be only slight before the market retraces very quickly. We're not breaking through lows and continuing anymore like we were back over here, where every time we break a low, we see a lot more momentum. Now we're only just pinching the low and then reversing. So it's a clear market, which is tiring. So if we do get to resistance again, I do think shorts here make sense. It would be even better if you can wait for price to spike through this high a little bit and then see some downside. In terms of targets, I wouldn't be so overly confident to push back to the low here. Reason being that the market is tired, so I'm not going to try and push a tired trend. What I would say is 50% of this area would be a reasonable target. This is your range. There's probably a good chance we do see a push back to the 50%, and then maybe here we put a higher low in and we continue higher, maybe. But that would be a safe move. You could also look for some buys as well. Another push back down, but that's a more aggressive move, more counter trend. You have to be a bit more patient for that. But just keeping things very simple, we're very flat. We do still have bearish momentum to take advantage of. Naturally, this is where I would see significance in terms of price, where I want to get involved. And I would say 50% of the move of the trend would be a smart target. And depending on the entry, that could be a decent risk reward opportunity there. So yeah, pound yen, lower time frame. I'll be looking at some shorts back at the highs, and the hourly chart will probably tell the same story. Yeah, I'll be looking at some shorts at the highs there. But again, rejection is key. So yeah, hopefully that made sense on pound yen and dollar yen. We'll go through euro dollar next, and we take a look at US 30 as well. Weighted by physical gold at a good price. So what could be ultimate weekly bias? Okay, interesting, Raphael. I'll go through euro dollar and US 30 first, and I can talk about that shortly after. Dwayne, New Zealand dollar, we could take a look at as well. Excuse me. Okay, where no problem. Replay, happy to help. Holy wonderful loss. Chat's completely changed. You're in different countries. Seems you're not even do daily streams. Gosh, bring back the old days. I'm good, Holy One. I'm good. Yeah, I mean, life changes, my man. But yeah, I don't want to be, because previously a lot of the content on the channel was very analysis based, chart based, and I'm still going to be doing that. But I want to focus a bit more on structure and rule based trading. So a big part of that was kind of doing less daily streams and doing more kind of structured content, more kind of trading, routine-based content. So that's kind of what I'm going to be focusing on in 2026. But yeah, I mean, I did take a break from streaming for about a month, I think, late 2026. So after that, kind of changed the routine a bit. And yeah, new people have come, some people have went. As well, so things have changed, but I'm doing good, Holy One. I hope you're doing good as well. Good to see you, man. Okay, bunch of markets to get through. Okay, so I'll go for Euro USD first, US 30, NZUSD. We'll take a look at gold, Aussie CHF as well, and dollar CAD. Okay, so euro dollar. So not a big fan of this market at the moment. The way I see it, we're very, very flat. I mean, we do have a slight drift with this ascending channel, but essentially it's just a slanted range. So I'm not gonna treat price as necessarily a trend, because it's a very, very slight one. And in terms of where we're trading, as I keep saying, we're in the middle of the range, middle of the channel. This is where the most speculation, the most uncertainty is going to be. If I want to find some smart places for some entries, I want to be located high or located low, or of course waiting for breakouts. That's really where I see opportunity. So because of that, if I'm going to take any trades here, it has to be short term. I can't be looking to push trades very far, just because direction isn't clear, at least in my eyes anyway. So Euro USD, if I was looking for a trade, I would say short-term buys, short-term sells. You might catch some opportunities off these areas. 1.177, 1.1983. The better opportunity, I would suggest, would be waiting to see if we can form a higher low and break highs here. Reason being, if we can start to show some structure there, I would say there's a pretty good chance we come back to test these highs. The market is still pretty consistent with the higher lows. Momentum still with the buyers. If this can be confirmed as a higher low and we can see price breaking through highs again, well, I would suggest the trend or the slight upwards momentum we have is still likely in play, and the odds of us pushing back to highs now is pretty high. So that's what I would say would be a good quality trade. Short-term view, you got a nice scope there, momentum's confirmed, and there's a pretty logical chance we do come back to test highs. Trading inside this range here is just going to be short-term plays, and it has to really depend on how price reacts with those levels. So if we drop back to the 4-hour chart, I would suggest if you're looking for some very short-term plays, let's study how price reacts with this area. There could be a short-term bounce. Likewise here, there could be a short-term bounce. But if we can see some conviction through here, then I like the opportunity for a push back to highs. And the opportunity just becomes a pullback and a continuation. So euro dollar, I'm not seeing much right now. Like I said, short-term opportunities there. But if you're looking for momentum and trend, then I would wait to see if we can start to break through highs again. And then that high becomes the next logical step. So yeah, if you keep an eye on euro, I would suggest keep an eye on those levels. We'll go through US 30 next, and then we'll take a look at New Zealand dollar. No, gold and New Zealand dollar. And Aussie CHF as well. Dollar CAD, retest 1.36. Okay, no problem. Okay, good. Above and below the 50 still works. Again, it's never the 50 that's the secret tool. It's how you use the 50 moving average. That's all you wholly want, because there's people out there using the 50 period moving average, not seeing any results, and there's people out there using the 50 and seeing great results. So the common denominator here is how you use it. So that's the real skill. That's the real art there. The 50 is just a good reference point. Okay, so we'll go through US 30 next. Okay, so yeah, US 30. I'm still keeping a close eye on this market this week. Reason being, we've broken through a very key level last week, 49,685, 49,500 we can call it. We broke through there with some real conviction. This was actually the week prior. And then simply the task was, okay, if we can support above this, then I'm looking for continuation, trend continuation, keeping it very, very simple. If we break back below, I'm still bullish, but my area of interest will become this area here for long. So I'm only looking to buy US 30 at this moment. I'm not interested in sells. If we do go and break through these lows here, then I'd say, okay, I'm going to relax that bullish bias. Perhaps there could be some short-term sells. But until that happens, I'm only looking for buys. So the plan for this week was, okay, if price does push deeper, I'll see what happens here. We'll look for some longs. If price does manage to reclaim this level, I'll still look to see if I can find some entries, keeping it simple, back to highs, so on and so forth. So US 30 right now is picking up some momentum, as you mentioned. And if this can really start to pick up, then I will be looking for some entries on a retest. If this is just noise and price comes right back down again, then I'm not really interested. I'll still be waiting for the bigger retracement, or of course, if we do later go and reclaim that same level. So in terms of the direction, I think that's really clear. In terms of the levels which I want to do business at, I think that's very clear too. Just I'm waiting for price to confirm that. And unfortunately, we don't really have that to the way I want it at the moment. You could take some buys and breakouts here, but it's just a very messy price action we're seeing. So I need those retests. But yeah, targets pretty simple, back to highs. We do have a very natural drift at the moment as well. So direction for me is very, very clear here. So yeah, US 30 is still a market which I'm keeping a very close eye on this week. Depending how we react to that level, hopefully can find some entries before the end of the week. In terms of New Zealand dollar, and then we take a look at gold. If I can spell correctly, there we go. In terms of New Zealand dollar, so again, not my favorite USD market. I say that because we've had such a huge explosion here. I was looking for this move actually a month ago, probably now. Never really saw that momentum, and then price, of course, broke to the upside, so that threw me off completely. But there was no retest to actually take any positions there. Price was just flying. But since then, we more or less come back to highs here. So in terms of the opportunity, would I be looking to try and find some buys here to try and continue that momentum? No, I don't like taking trades when price has already moved too far. If we've had some really considerable aggressive momentum, I'm always waiting for price to stabilize itself and then go again, especially in FX. So yeah, in terms of buys, it's too late for me to take buys. In terms of selling opportunities, it's an aggressive sell because essentially I'm trying to call the top on that momentum there. In terms of what price is actually doing, very, very flat right now. Not really much consistency. I do think this could be an interesting low. Let's see what price can do there. If we can support that, I think naturally that could be a nice place for a buy. Essentially what we're looking at is a bit of a flag pattern there. I wouldn't be looking to shoot to the moon, but that would be an area which, again, from a day trading standpoint, I do think we can probably see a bounce. Maybe price goes on, maybe we stay flat, maybe price eventually rolls deeper. Who knows? But that for me does look like a spot area to at least keep an eye out. And then from a seller's perspective, naturally, this is where I would like to take a short. But again, it really depends how we react there. It's not a situation that, okay, because price is at resistance, I'll sell. It's all about how we're reacting. So yeah, New Zealand dollar, it depends on your bias. If you're looking for longs, there could be some opportunities down here, but of course, it depends what we do. We could very much just break straight through that level. So keep an eye out. And sells, which would be the slightly more aggressive trade, but makes sense because of where we're positioned. Not only are we at highs within this move, but also coming into highs there. But again, with this sell opportunity, I'm not saying I'm expecting that. It's more so we might have a slight bounce down and then maybe continue up. So be prepared for that. So yeah, hopefully that made sense. Gold we'll take a look at next. Hey, what's up, Bashi? Welcome to the stream, my man. Hope you're doing good. Long time no see. Absolutely. Hope you're doing well. No problem. Natty, happy to help. Butter, Sol, you okay? We can take a look at Sol, no problem. Oil as well. Okay. Sure thing. Okay, let me go through gold quickly. So Raphael mentioned you're looking to buy some physical gold. What would be the best price for that? Now, I think it really depends on your time horizon. Because if you're just looking to buy physical gold, I would still say you're at a decent price, even though we're not far off all-time highs. But again, it depends on your time horizon. If you're looking to hold that physical gold for 6 months to a year, then I would still say it's a good price. But at the end of the day, 6 months to a year, we could still very much be at the same price. We could be even a lot lower. If your time horizon is a decade, well, I think you're a very good price because I don't see any reason why gold will lose value. I can only see reasons why gold will gain value. So if your time horizon is long enough, then I still think even though 5,000 is a lot higher than where we were a couple of years ago at 2K, I still think there's still value to be gained there. So it depends on your horizon. Because I could say, okay, let's wait for price to test support. Well, if you're buying gold to invest, you're not really so concerned if we're at support or resistance. It's more so, what's your long-term thesis of the value of gold? Well, I still do think that's likely to go up. Again, not investment advice. But I still think that's likely to go up. So it's not so much where we're trading; it's is there still values, there's still upside potential, absolutely. So I wouldn't be too concerned about price because we've already seen a huge move. If you're concerned about price, you probably want to see a big retracement, but that's not necessarily guaranteed either. And if that's the case, you can always pick up some more. So yeah, if you're looking for physical gold purchase, I wouldn't be so concerned about technicals. It's more so um, the appreciation of gold. What do you expect from gold in the next 5 to 10 years? If that looks bullish to you, then I think the buy makes sense. The technicals come and go. This is more so trading, short term speculation. Don't be so concerned about that if you're looking for a long term play. Yeah, that would be my advice. Um, we'll go through the Aussie Seat Chef and dollar CAD for LFTJ. Then we could take a look at Sol and oil. All right, no problem. Take care, everyone. Key FX and metals to look at for the next 2 months. It depends on your time horizon, man. Are you day trading Mocha or are you swing trading? I think an FX pair to keep an eye on is dollar Swiss. I like dollar Swiss, and I think there's still a lot more downside to it. So if you're looking at swings, shorts, I think dollar CHF next, well, probably more than 2 months could be one to keep an eye on. Anyway, let's go through Aussie Swiss, and then I'll take a look at oil and Sol next. So Aussie CHF, very, very corrective market, slowly picking up the pace a little bit. I think this could be a smart play for some longs. I can't lie. I think this is a really nice opportunity for some longs. Reason being, the market is very bearish. Don't get that twisted. Very, very bearish. Still probably like to see more downside, but we've recently taken out all-time lows, and we recently recovered that. So I do think there's going to be some opportunity for some retracement. And based on where we're trading, we're not really trading at any significance yet. I would say this is really where the significance does lie, between 0.56, 0.58. So this is really where I would expect price to start to slow down, consolidate, show some 50-50 price action. At the moment, we're just clearing back above prior all-time lows, and momentum slowly picking up. So I would suggest as long as we can stay above this, this is probably our next destination. And if I drop to the 4-hour chart, we've been super, super consistent with all these higher lows. So you got a very clear picture. The picture is, as long as these higher lows remain intact, the buys make sense. If price does start to break through those lows, the buys no longer make sense. Well, at least in terms of momentum, because we could just have a bigger retracement and then bounce back up. But it would be a completely different structure. So you can have your stop loss fairly tight below these lows. It gives you a nice way to frame risk and a nice way to position yourself in the market. You've got a pretty straightforward target there. You've got some more theoretical higher time frame targets, which we just mentioned. But logically, higher lows still maintaining, support still maintaining. As long as that stays true, you've got yourself a nice target to choose from. And based on where we're trading the higher time frames, we've got further reasons to expect more upside. So I do think Aussie CHF is a smart buy. And if it doesn't validate itself, we'll reanalyze, see where we go from there. But yeah, Aussie CHF, I would have a long bias. I know we are coming back into highs here, which could make things a bit awkward, but momentum's still persisting. So buys still look good to me. Okay, so we'll take a look at oil. No, we'll go through Solana next, and then we'll go through dollar CAD, then Solana, then oil. A bunch of markets to take a look at. M1 Sweeper is here. What's up, Shiny Yellow Metal? Hope you're doing good. Long time no see. I'm doing good. Thank you for asking. Can we expect bouncing Euro CHF after taking the lows? Also, $100 strength short term, which supports Euro more. Well, if you're considering dollar strength short term, then of course you'd be looking for some downside in your USD. Are you comparing whether to short euro or buy euro CHF? Is that your question? Or are you talking about two ideas separately? I can take a look at both though. What's up, MT? No problem, man. Happy to help. Okay, we'll go through dollar CAD quickly. Running out of time, so I'll be a little bit more precise with the analysis here. So dollar CAD bouncing off some key lows. Where's the play here? I don't really see much of one. If I had to be looking for opportunities, it would naturally be looking to buy. Is now a good time to be buying, especially short term? I don't think so. Reason being, coming back into consolidation on our left, and this consolidation did produce some pretty aggressive bearish momentum. So I wouldn't want to be buying here. If you're on like a 50-minute chart, you might find some short-term opportunities. Trend is still up. Something could persist like this, and you might still catch a buy back to highs. Yeah, the lower you go, the more opportunities there will be. But from a intra-week style, if you're looking to hold for like a day or two, this is not the best place to pick up longs. You want to be waiting for a push back into lows and look for opportunities there. So I would suggest for dollar CAD, we're flat, and the best opportunities will be buying at lows or selling at highs. So if price pushes up, starts to struggle at highs here, there might be some short-term sells off that. If you're looking for a buy, you either wait for price to break above this or come back into lows. I wouldn't be so optimistic about buying where we are right now. So depends on the price you're looking for. Retest 1.356. 356, that's around here. A bit late to the party. Wait and see how he reacts around 1.3722. Okay, at the high there. Yeah, I mean, if we do reject that, then of course that would be a sign to, okay, maybe be a bit careful. If you do break through, like I said earlier, I think that shows the buyers are starting to be a bit more in control of the market, because we are coming from significant support. So if you are looking for buys and we do break through here, that would be a smart place. And then the next big target would be in and around there to be careful of. But equally so, if you do come back to lows, show some good evidence there too. I think you're priced very well. Again, you don't have to be looking for the home run every time. Some trades are just there to be in it for a short time and take your profit and run. And of course, some trades you want to be pushing and really taking advantage of. I think if you're here, it's more short term. Here, probably short term as well, but just be wary of that high. In terms of Sol, so Solana's been, yeah, I mean, crypto is not really the best time right now. We're breaking through some significant support here. So it's not looking great, I must add. If anything, we could even be seeing a push back into that range between 40 and 20, between 40 and 20 there, which it takes us back to 2023 levels, which seems a bit anticlimactic. We had so much upside and nothing's really come from it. We just about saw new all-time highs, but didn't sustain it anyway. So in terms of opportunities now, again, it depends what you're looking for and what your time scale is. If you're short term, I'd only be looking to sell. Momentum's with the bears. We already had a nice short opportunity this week back at the highs there. Or was that? No, that was Sunday evening, but same thing. If you're looking for more opportunities, I'd be looking at the same area. Or if you do slightly have a slightly deeper retracement, I'll be looking at 100 around there. This is where we had a brief pause, momentum picked up, really aggressive move back down. That naturally would be also a nice place for a short as well. But equally so, I would be looking at sales. Now, I would be looking for a huge move. I did say I do think price can still push lower, but we've already had a pretty considerable move. So I wouldn't be trying to push too much here. I would suggest if price comes back to resistance and rejects well, back to this support level would be the first target, maybe secondary target. And then if things go better, if momentum picks up, I'll probably have a small amount, which I'll trail to see if I can get to those areas. But that would not be my main goal, my main intention. So yeah, Solana is still looking very bearish. I would only be looking to short. Someone mentioned oil longs. I don't mind oil longs, but I would look for a slightly deeper move before engaging. I like the lows here. I like the fact that we're very choppy and seeing a lot of wicks. It means that we're seeing buyers fairly active, but I would say we're not very much at a key area of value where I would be happy to look for a swing, because essentially we're range bound here for oil, highs, lows. So if I'm in a range, my goal within that range is to buy as low as possible or sell as high as possible. So if I'm buying here, well, there's always the opportunity I could buy a little bit lower. Now we might not get there. We might go from here. That could be the case. But again, we're not fortune tellers. We're traders. We take advantage of an opportunity that the market presents. Sometimes it will. Sometimes it won't. So I would always want to be buying a bit deeper if I can, and that would be the opportunity I'd be looking for. And actually, if I could see some wicks like this, some rejection, that's a nice place for a buy. And again, target doesn't have to be all the way back to the other end. It could just be 50% of the range. That's always going to be a very, very healthy target. You take 50% there, and 50% at the other end. That way, you manage to trade very well and increase your chance of walking away with a profit. So yeah, I do like US oil to the upside, but I would be looking a little bit deeper before engaging. And we can take a look at, we'll go through Euro CHF and then wrap it up there. Euro strength against CHF after sweeping and creating new lows. Okay. What's up, Namzi? How has delaying your trades affected trading? What do you mean delaying trade? Oh, okay. About the 2026 goal. To be fair, it's actually been very beneficial psychologically. I would say in terms of actually trading, I've probably seen about similar results. But in terms of psychologically, in terms of actually trading, I've been a lot calmer. And from my perspective, it's actually quite beneficial because I think from a short, if you're like day trading is a little bit difficult because you can't wait as long as a swing trader can, but you still can wait and delay your entries. But from my perspective, from a swing, has actually been very beneficial psychologically. But in terms of just taking the trade, it's been similar results. I mean, because the style hasn't changed. It's just I'm waiting an extra 24 hours before I do get involved in the trade, which not necessarily 24 hours from the time I see an entry. It's 24 hours since I get the bias. There's a big, big difference. So, and I think that probably confused some people. When I say delay your trades, I'm not saying delay your trades from your entry. I'm saying delay your trades from when you get the bias. So, for example, if today happens and you have a bullish bias, come back again tomorrow to see if that bias still stands. And then Thursday or the day after, then you can look for your entries rather than having a bias now and then 5 minutes later being in the trade. Of course, lower time frames, you don't have that luxury for another day. Maybe it's another session, maybe it's another hour, etc. And you're going to have to experiment with that. But from my perspective, waiting a little bit before cementing the bias has helped psychologically because I'm not rushed. When I take a trade, I know that the bias has ticked my rules, 10 times over. Doesn't mean you're going to be more profitable, but it does reduce the poor trades you take or being emotional when you do take trades. Anyway, let's go through which let's say I was going to go through again. Completely forgot. Euro Swiss. Okay, we can take a quick look at CAD Yen as well. LFTJ, no, not permanently. I mean, to be honest, life is it is an open book. I'm not too sure where I'll be even next year, to be honest. So but at the moment, but things can change. Okay, so let me go through Euro Swiss. So Euro Swiss, haven't really been looking at this pair a lot. I must admit. I'm pretty sure at all-time lows, aren't we? Yes, we are. So what's the play here? Well, we're not really seeing aggressive momentum, but we are seeing bearish momentum. So it's not a situation where, okay, the market's falling short, short, short. It's the market's falling, but we are looking increasingly more tired and like we're about to retrace at some point. So if I was looking to trade this, I would suggest there could be some shorts of the highs there. Again, keeping it short term, I wouldn't be looking for this. I would say this is likely an area where we could react from. If we break through this high, then I wouldn't be looking for sells anymore, because I would suggest we're probably finding at least a temporary bottom if that happens. Okay, so you're looking for a bounce at the low. Well, it's a difficult one because we don't really have nothing to refer it to. You know, we're at all-time lows. So would I be looking for buys? No, not really in these conditions. I would suggest if you can do something like this, then yeah, I would look for buys now because there's more evidence in my favor. There's not a lot of evidence in my favor, so I'm not going to take some buys in this situation. I'm always going to be looking in favor of where the predominant force is, especially in FX, because FX, if there is no predominant force, we're just flat. So then there needs to be it needs to be buyers or sellers winning the battle, and then I take advantage of that imbalance. If the sellers are winning, which they are, but of course it looks like they're running out some steam, I would still be in the side of the sellers, but just be a lot more careful. I wouldn't want to try and be the first buyers to try and take this higher or try and look for some short-term bounces. That's personally my style. So yeah, I'll be very, very careful. Even if you do see a nice spike of the lows and potentially a bit of a stop hunt, it does increase the likelihood that we'll see a bounce, but still it's just not the conditions where I want to do business from a bullish standpoint. So I'll be careful there. Okay, I'll wrap things up with CAD yen longs. Okay, so CAD yen, I like where we're positioned. CAD yen longs I do like because we are trading in a bullish market. If you go to the daily chart, clearly a bullish market. There's still room to the upside. There's still a possible push back to highs at 117. Of course, that's not necessarily the target, but it's nice to know that, okay, we've got a bullish market and there's still room higher. Therefore, unless I'm seeing a break of structure or significant selling pressure, I'm going to assume that we can still push higher. So we've got more upside to potentially see. Market still obeying support, which is critical, and we're still looking very corrective as well. So I would suggest something like this looks likely. Of course, I'm not necessarily saying this is going to happen, but I wouldn't be forecasting that. I would wait for that to happen and then we can react to it. So yeah, I think buys make sense. You're trading at a very confident level 112. I would say as long as we hold above this, the buys are still in control. And you do have some distance back to the next major level resistance. So I think that's a smart place for a buy. So I do definitely agree with that bias, that trade idea. Absolutely. I appreciate it. Bashi. Yeah, guys, if you're enjoying the stream, drop a like, subscribe, share with your friends, hit the bell. All that does really help out. I do really appreciate it. GG MSP went up 0.7 pips. Oh no. At 7:37 a.m. Yeah, that's to be fair. The thing is, when you're trading in the small time frames, you might miss a trade like by 0.7 pips. And then on the larger time frames, you might miss a trade by 7 pips or 17 pips. Of course, the pip difference is bigger, but it's still a very minimal margin to miss a trade. And again, the thing is, that's good discipline, though, Bashi, because you want to have rules, you want to have set levels, set areas which you want to be doing business at. And sometimes the market will come very, very close to your area and just miss it. And the discipline is that you're going to wait for price to hit your area before getting involved. And if you do get involved and price hasn't quite hit your area yet, well, if you end up taking a loss, well, you're going to look quite silly, and you're probably going to be mad at yourself as well. So it's really the trades that you don't take is really what the skill is, because again, trading the market is going to be going up, going down. Yeah, pretty much 50% of the time. Even indices that drift higher, I'm pretty sure the number of bullish days and bearish days are fairly equal, if not equal. It's just the bullish days are probably on average slightly larger, of course, for us to get the drift, or if you include gaps as well. But anyway, the real skill, excuse me, the real skill is taking trades that don't fit the plan, because that's really where you're going to give a lot of your gains unnecessarily back to the market, because drawdown's inevitable. Every plan's going to have drawdown, but you're going to have extra drawdown by taking some noisy trades which are not quite hitting your area. So although it is frustrating to miss a trade 0.7 pips away from your level, but at the same time, you pat yourself on the back for having that discipline to wait those extra 0.7 pips, which of course didn't happen. But yeah, easier said than done. Yeah, and the emojis are justified as well. Absolutely. Anyway, guys, we have come up to the end of the stream. I do really appreciate each and every one of you tuning in. Good to check up on the fam, see everyone's doing well. I will be live again tomorrow on Trading Nick's channel, so if you do want to see more of my analysis, go check out his stream as well. If you guys haven't seen it as well, I have launched a private Discord server which focuses on routine. As I said earlier in the stream, my focus this year with this channel is to be less focused around analysis and more focused around structured trading, because I think that's really the main goal for everyone here. Because analysis is good, but it's only good for context. You're only going to analyze the market to have context of the market. You're not going to analyze and then trade necessarily purely based on the analysis, because you need rules, you need entry requirements, management plan, exit rules, etc. So structure is very, very important. And a lot of my content always has been around analysis. And I still want to be providing you guys analysis, my thoughts, my context of what I expect from the market, but I want to be providing more structure as well. So with the Discord, focusing a lot on structure, separate streams there. Instead of just focus purely on analysis, it's more so structured which markets we can focus on, which are inactive, which levels are being rewarded, which are not. And just making sure that we're having routine as we approach the market, rather than, okay, I think this is bullish, so let me look for a buy. It's more so, doesn't really matter what the bias is. It's more so, have my rules been met? And again, that's going to take you so much further than understanding more about the market or understanding which direction the price is going to be in. If you have those rules, it'll protect you. And you can always tweak the rules and improve as well. If you're always going to be in every direction, you don't really know what to tweak. So do keep an eye out. I'll be sharing more information about that as the days and weeks progress. But if you are interested, drop a comment down below or message me on social media. But guys, really appreciate you tuning in. Have a great day. Have a great rest of the week. As always, I'll be posting my analysis on the weekend, so do look out for that. Like I said, we'll be on Trading Nick's channel tomorrow. But guys, have a great day, and I'll see you all in the next one. Take care.